Okay, what's up, everybody? I don't know what I just said. What's up, everybody? This is Zach. Obviously, I'm just making a short little video to hopefully explain further in depth to you guys about divergence. Not really in depth, but just simplify it down to geometry because that's all it is, really. There's deeper meaning to it, and it's very technical, but to spot it, that's all you really need for our strategy, at least. So let's dive right into it. Okay, so we're going to start right here. I just have a few examples mapped up for you guys. So obviously the technically divergence, what it is a either in an uptrend we have a high and a higher high, and then on the RSI or TDI, whatever you're using. In this case, obviously I have the RSI up. You have that same high, your origin, your peak of origin, and then you have an higher high on price, and then a lower high on your indicator, which creates a slope in the opposite direction. That's what I'm preaching, for you guys to look at, to spot divergence, is just look at the slope. So pretty much what you want to do is just find a high or find a peak. In this case, we have this peak right here. This candle right here is our point of origin, and then wait for another peak above it or below it. In this case, we're in an uptrend, so wait for the next highest peak. As you can see, it's right here. Just connect the dots. So you have your two peaks. Just connect them with a trend line. As you can see, obviously, oh my God, the bully toucher. I haven't even looked at GJ. Whatever. As you can see, obviously, we have a upwards slope or upward slant in our trend line on price. All divergence is the complete opposite of what price is telling you. So look at your TDI, RSI, and do the exact same thing. Find this peak. So grab your crosshairs, go over to that peak right here, grab your trend line, find the second peak right here, and connect the dots. What do we have? A downwards sloping trend line. Oh my God. Anyways, it's the opposite of price. So in an uptrend, we're looking for obviously the upward sloping trend line on price, and then downward sloping or downwards facing trend line on your technical indicator, your oscillator, which is, RSI or your TDI. That's all it is. It's facing the opposite direction. Very simple. And what this means is a weakness. It shows a weakness in the market and a very high probability of reversal. Okay? So let's go for another example. Here we have a divergence in 3 hits. And yes, you can do that. Divergence lasts until it is broken, which I have an example I'll show you guys, because it can catch you in the wrong way, and you'll end up in a trade you don't want to be in. This happened personally a few times. Anyways, so here we're in a downtrend, obviously, and we're looking for lower lows to connect the dots on. And I'll just undo this really quick and then show you guys how I did it. Here we have the point of origin, and it's not like you're looking for any special point, it's just anywhere. You're just looking for a peak, and then you're looking for another one to connect it to. So we have this one, you wait for another one. Here we don't have a lower one. You wait till a lower low comes in, have your second one here, connect the dots, downward slope, find it on your TDI or RSI. This one, it's not even, that's actually, okay. Find it, it's right here. and find your second peak, TDI, it's right there. That's divergence. Why? Because this is facing down and this is facing up. Weakness in this downtrend. The market wants to push up. Okay, that's what divergence is. And you can wait for another push. And there's your third hit right here. Just extend your trend line, connect the dots again, and do the same exact thing on your TDI or RSI. And so now you have 3 hits, which indicates even stronger divergence and more weakness. There's a higher likelihood of this reversing out of here. And now you see it doesn't happen for a while. But that's what you want to look for. So actually, another thing you could pay attention to is the angle of this, the slope of the lower lows or lower high, or your pretty much the slope of your trend line. The higher degree it is. So the more of an angle you get, say this was up here, that the stronger that divergence is. So the more likely you will get that you will get your move. Obviously, you only have short-term buy opportunities here. Okay, so let's go and find another one. Okay, next one we have, I didn't go through every single one we had, I just picked out a few. Next one we have is here. And so, yes, guys, this does work no matter what. You don't have to have a perfect, perfectly moving market, bouncing market for this to work. It's the divergence is, like I said, it's a low and a lower low and a low and a higher low, or the opposite in an uptrend. Okay? Which means it could be riding like this and you could still draw it out. You know, here you have divergence. It's riding. You have divergence here. Okay? So obviously, here's our point of origin, our peak of origin. We wait for another one. We don't get a lower low until here. Draw it out, connect the dots. You know, you start off there. You already have your divergence there, but as it plays out, you get even another hit. And now it's riding downwards on that trend line. And here on your RSI, you connect the dots, and here's your peak, and you have an upward slope. So obviously you have divergence. I don't know if I said this already, but you just want the RSI or the TDI to point in the direction that you're looking to trade. So obviously in a downtrend you're looking to buy. You want your trend line or your RSI or your TDI to point up in that direction. Okay, very simple stuff. The last thing I wanted to show you guys, here's just another example. The last thing I wanted to show you guys is where you can get really screwed. And this has personally happened to me. So be aware of it, definitely. And probably I would advise you to stay away from these type of opportunities. So here, let's just say we're watching GJ right here. Watching. We get this high. Okay. Oh my God, shut the fuck up. We get this high and bring out your crosshairs, drag it over. Here's your peak. And here's your peak on the RSI or TDI. Okay, so obviously keep watching. We get a higher high, so you can connect the dots. You have an upward slope here. We're looking for a downward slope to put in divergence and look for a selling opportunity, right? So as you can see, as we're coming higher on price, as price is coming higher on your TDI or RSI, you're still going to be lower than this peak. You're still going to be down here. So technically, you have divergence. It's just very, very short term. It's very small and it's very close, which means the likelihood of that divergence breaking is very high. And that's exactly what happens here. So you're looking and you're like, oh, it's, divergence, you have divergence, the TDI is lower and prices made a higher high. Yeah, but look how close this is to making a higher high on your TDI, you know, um, and that's exactly what it does. So price comes up, you can still have an opportunity for divergence, but you don't get it because your TDI just follows price. And what happens is if you draw this and you're like, oh, I have divergence, and let's say you sold right here because you have divergence, well, you're screwed because you just sold and it went against you 3 pips. Well, obviously it's not a lot, but this happens where it'll just shoot up on you and you're kind of screwed. So be aware of that. Where if you have a peak and you make a higher high and like a short term opportunity, if you're looking for one and you have a situation like this where you have a peak on your TDI, but it doesn't come down very low and your price comes up right away, be aware that this can very easily come up and just break that divergence. So now you have this upward slope and matching your upward slope on price, which breaks your divergence, and there's no longer that weakness that you thought there was. So now you're caught in a trade that you don't want to be in. You're in a sticky situation. So this does happen if you're looking for short term divergence. That's why I like to look for divergence that is kind of spaced out, meaning it has some movement in between it, or it's just spaced out more than 2 candles, or like 3 candles. I like to put a minimum of 3 candles on the requirement for divergence. That's just me. Don't take my word for it. But as you can see, there's obviously space and movement in between these peaks. So that's very nice divergence, and you get a huge opportunity off of that. Last thing I want to go through is the breaking of divergence over a longer term, which is harder. I should have. Okay, I think we have yeah. Okay, so this is the first or the second example I showed you or whatever. As you can see, we're still making lower lows here, or at least here, still making a lower low. If you drag this out from your origin point, so this whole thing is divergent. At this point, you probably want to look at this on the 5-minute. It's a lot easier to see 5-minute chart. But if you look on your TDI and you extend, eventually this actually, in this example, you don't get it quite yet. You don't get it until all the way here. But once the trend line on your TDI is no longer facing the opposite direction of the trend line on price, your divergence is now broken and invalid. What I mean by that is, you see obviously here we have a downward sloping trend line, and this is all still valid because we have an upwards sloping trend line until this slope, you want to follow it. You want to keep connecting the dots until this slope is going in the same direction of price, of your trend line on your price. And so here we actually have divergence this whole time because this is still facing up. If you go on 5 minutes, it's a lot easier to see. But actually, yeah, like I said, it's a lot easier to see. This is our origin. This is where we ended up before we started reversing. Draw it out here. And we have divergence all the way until this peak. Because now, or actually I shouldn't say until this peak, until this line is facing downwards. Once it's facing downwards, now it's facing the same direction as price. Now your weakness is no longer there. Okay, so your divergence is invalid. So I just wanted to make a short video and explain that for you guys. Hope you have understood divergence now. It's very simple. If you have any questions, just hit me up in the chat, and I'm sure like Derek is going to make a video about it. So whatever. You don't take it from me, but this is the truth. Anyways, take care, guys. I'll see you in the chat.